Hey there, podcast listeners. Exciting news. My new audiobook, The Short Book Formula, A Financial Professional's Guide to Writing a Book in 6 Weeks to Attract Ideal Clients, is out now. And the best part, for a limited time, we're offering this audiobook to you for free. Hurry over to www.theshortbookformula.com and claim your copy now. And now, on to our show. Welcome, everyone, to another episode of the $1 Million Producer Show. I'm your host, Paul G. McManus, and today I have a special guest, Ben Golden. Ben is the founder and CEO at Golden Tax Relief, a company focused on both tax resolution and tax planning. Welcome to the show, Ben.
Thank you for having me. I really appreciate it.
It's great to have you. Thank you for taking the time. And I know what created this opportunity is that both of us are going to be speaking at the upcoming Elite Resource Team event in San Diego in June. I'm excited to get a chance to know you in advance and have our audience get to know what you do. Tell us a little bit about who you are and what it is you do. Who is Ben Golden?
I'm just the average, normal, everyday accountant, except my focus is twofold. Number one, because of my background, I have a focus on tax resolution. And when the IRS slowed down during COVID, I started doing planning in order to help because the IRS has stopped forcing clients to pay for a little while. But Paul, let me tell you,
that's funny in a very perverse way, right? It's like
they're coming back. I'm telling you, the IRS, we've all heard the stories of them hiring more people and having a lot more budget. But at the end of the day, because of, like I said, because of my background, I want to advocate for clients, for people as much as I possibly can.
And when you say advocate, what does that mean?
The normal, average, everyday taxpayer, client, person does not want to deal with the IRS. We all think that the most feared letters in the alphabet strung together are IRS, right?
They aren't they? And I would rather deal with anyone else. FBI, CIA, NSA, just not the IRS.
They're serious and they have teeth behind what they're going to do.
Exactly.
The challenge is everybody, when you go to your mailbox and you see that letter, it's like, oh no, do I open it or do I just throw it in the back of the shelf?
I never received it.
That's not the best approach, Paul. So, we help people that have had challenges. And I like to say that almost all of our clients are really great people that have had things happen in their life to create challenges that stop them from either being able to file or being able to pay or something of that nature, or an audit. The goal ultimately is to be the person that is the go between the client and the IRS in order to really tell that client's story the proper way. I know the IRS's playbook. It's called the Internal Revenue Manual. I know how to either get on offense or get on defense or how we should strategize for that client. That way we can get the best outcome for them.
Can you give us some examples of typical situations, if there is such a thing, that prompt someone reaching out to you?
Absolutely. I had a gentleman, his wife got cancer and she passed away. She was the one that did everything with the finances in the house. And he just literally would go to work every day and come home and be with his daughters. And that was it. He financially shut down. He mentally just checked out for a little while. And so he started getting letters from the IRS. Hey, you haven't filed. He comes to us and he's a broken person. Because that happened to him, what we wanted to do is get him back on track. We filed his tax returns. We get him into a payment plan. So therefore, life can start moving in a better direction for him. It's stories like that breaks my heart for people because it's a good person where things just happen in their life. Life happens, right? Mm-hmm. Had another person that was doing really well in their construction company, had an automobile accident, and then became disabled. And it made them to, they didn't want to focus on anything else. They got into a gambling addiction because of it, gambled all of their money away, did not pay tax on any of it. And at the end of the day, now the family is in a bad situation. He's had a double whammy. Paul, I just say that life happens. And so that's typically a story that happens. We've had a lot of stories of people that have been stealing a lot of retirement funds and things of that nature as well. I mean, there are thieves out there. They take all the money out of retirement. The person, oh, we're going to help you invest into Bitcoin. And ultimately, they take all of their money, you
Yeah.
know. But it's challenges like that that I want to come in and advocate for the client the best of my ability because I've been on their side of the table before.
You were sharing with me before we clicked record, but I want to ask you about it. So, just as your backstory and what led you to do what you do, you had said something along the lines that you had been yourself bullied by the IRS. I'd love to
Yeah.
know a little bit more about that backstory and what led you to do what you do today.
Absolutely. I bought my first accounting firm. And when you're a brand new entrepreneur, you want to help everybody and anybody. One of my clients was in the logging industry. And he asked me, he said, Ben, can you just sign these paychecks for me? That way I'm in the woods. The guys can just come by your office and get their payroll checks and it won't be a problem. I said, yeah, no problem. I ultimately became a signatory authority on his checking account. I signed maybe 3 checks in 2 years or something like that, something really small. Anyway, he stopped paying his taxes because he paid for other things like labor, and he had a fire for one of his piece of equipment that insurance didn't pay off all in full. So he didn't pay his taxes. And then the IRS ultimately came back and said, Ben, you have to pay his taxes. They said, Ben, you have to pay $171,000 of your client's taxes. And I was like,
Ooh,
I don't have that kind of money. And then the IRS agent said this. Are you ready, Paul? Ben, I've looked at your retirement accounts. I've looked at what property you own.
ooh,
I've looked into which accounts you have a signatory authority on and how much money is in them. I know the equity you have in your automobiles and your home. Ben, you have to liquidate everything and pay the bill that you owe. And I said, I don't owe it. And she said, yes, you do. And then she said, I'm going to give you 24 hours to give me a decision. And if you don't give me a decision, I'm coming after you.
wow.
Paul, what I did was I went home that night. I had really young children. So we ate supper, put the kids down in bed.
Before you continue, I'm just trying to think for a second. That's a traumatic situation. And before you tell us what happened, I'm just thinking, what would I do in that situation? One, I would be pissed off like a, there's no end.
I wasn't upset. I felt like I was being treated unfairly.
Yeah.
And I was really upset and I was scared because I have 2 children. I just bought this new company, haven't been married that long. I've been married 4 or 5 years. And how is the wife going to react? What are we going to do? Paul, I chose at that point not to tell my wife because she would not have had any control over the situation. And all she would have done is worry. So that night, I told my wife, I was like, babe, I got to go back up to work. I got some research I got to do. And she's like, okay, well, what time are you going to be home? I said, don't expect me home tonight. I went to the office and about 2 in the morning, when I took my master's, I had a class on policy and procedure of the IRS. And so I had a book
Hmm.
that had all the policies and procedures of the IRS in it. One of the other classes was tax research. So I'm doing my research. I'm going through at 2 o'clock in the morning. I found it. It's called a 4180 4180 interview. And the agent did not do this on me. She said that I was a responsible party, even though she didn't give me the interview. And she said I was responsible for the client's taxes. If she would have done the interview, she would have known that I had a contract that said I have signatory authority only, and I do not make any decisions as to who to pay. It was called a Scribner contract, much like a scribe, the old day scribes.
Yeah.
So that's what it was. It was a signature only contract, and I did it for his convenience. And so she did not do this 4180 interview on me, and because she didn't, she assumed that I was a responsible party. And because she assumed I was a responsible party, that's why she looked into me. Now, she didn't have the authority to pull my credit. She didn't
Hmm.
have the authority to pull my DMV. She didn't have the authority to look to see all the things that I owned and look up court records and all that kind of stuff as to what I owned and what I didn't.
Yeah.
She didn't have the authority. She had the power, but she didn't have the authority.
Just to jump in a second, and I'm sure you're about to say this, but just the burning question in my mind is, okay, so you found a light at the end of the tunnel, and I'm just
Yeah.
curious, what kind of power do they have? Do they back down? Do they say, you're right, sir? Or is it like, doesn't matter, you're going to do this anyways?
Paul, I think this is a great question because I structured my next actions based off of your question. My question was, she overreached. What is the next step going to be? So I went above her head and I said, when I called her the next day, I said, Miss Ma'am, Hey, I need to get your manager's information.
Ah,
Why do you need that? Because I don't have it for the file. Okay. I didn't tell her I knew anything. Now was not the time to confront. She gave me the manager's name and number. And then she said, okay, Mr. Golden, what have you decided? And I
mm,
said, I've decided to make a decision later. She's, I'm going to come after you. And I said, we'll see. Hung up with her. That was back in the days when we could actually call somebody, right?
okay.
Call the manager answered. I don't know how these people answered on that phone call, but I think it was just the way it was, the way it happened, right? So the manager answered the phone. I was like, listen, I'm dealing with so and so person, a revenue officer. I need your manager's information, please.
Ooh, going up the chain.
So I said, I need the territory manager's information. She said, why? I said, because I need it. And she goes, what's going on? I said, I'm not talking to you. And she said, okay, here it is. Call the territory manager. And I knew that if I went above her head one level, there would be no sweeping under the rug because that means there's collusion between all three. You can keep something between two people, but it's really
Yeah,
difficult to keep something between three
yeah.
people. So I called the territory manager. I talked to him and I said, this is what I want to do. I want to talk to TIGDA. And TIGDA is the police division of the IRS for the revenue officers. And I said, I want to file that report. And I also want to file a report with you saying that she abused her power, authority, and discretion. And so at the end of the story, you can imagine it played out. It took a little while for it to play out. But at the end of the story, she was given 30 days off without pay. She was told that she could never work on a case with me ever again. If I was on the case, she would have to send it somewhere else. And we ultimately had a good outcome for the client. I was not responsible. They took me off immediately. We had a good outcome for the client. I was scared in that process. If I didn't know about the 4180, if I didn't know to go above the manager's head, where would I be? I probably would have had to pay something or I would have had to find a tax attorney.
That's incredible. I'm just curious what gave you the insight or the thought to not just go above her head, which I understand from what you're saying, but what gave you the inclination to go that far ahead?
Like I said before, it's because two people can hold a rope and it can stay up, but three
Right.
people, somebody's going to drop something somewhere. I knew that there had to be more than just the manager involved, ultimately, because I think that they could have kept it contained between the two of them. And I didn't want that to happen.
The question I have is that in this case, it sounds like they were clearly in the wrong and you were able to
Right.
clear your name, for lack of a better word.
Right.
In many of the clients that you work with, I'm guessing that it's a slightly different situation in the sense that maybe they didn't file, they didn't pay, and they're probably in the wrong. And now it's a matter of how do you make things right.
When we deal with the IRS, there's two questions that we ask. Number one, do I owe it? The question of do I owe it is usually an audit. Okay. I'm being audited and I don't think I owe this money. Or the IRS changed my tax return. I don't think I owe this money. The other question is can I pay it? Okay. Which means I know I owe it, but I can't afford to pay them all the money that they owe right now. So we have an approach for either one. And it also depends on where you are in the process. If you owe $200,000, it's a lot different than owing $2 million. And the rules are different for each. If you owe $20,000, the rules are different for you. I know when somebody starts talking to me based off the letters that they've received, I know where they are in the system because of my experience, and I know what the IRS is going to do as their next step. So it depends on where they are as to what we do. Sometimes we use a statute of limitations.
Hmm.
Sometimes we want to have a very small payment every month. Sometimes we say, IRS, I can't pay any of this. I want to negotiate it. And instead of paying $372,000, I want to pay $1,200, which I got a client to do. It really depends on the situation as to the approach that we take. But here's the beauty. Ready? Strategy goes in at the first call.
Okay.
What do we want to play offense? Do we want to play defense? That's what comes with experience. That's what comes with knowledge. That's what comes with the fact that I can talk to other colleagues and things
Hmm.
like that to find out exactly, if I don't know, if I haven't been in the situation, or if I want to protect something that's special, how do I do that?
Yeah.
That's really the goal. That's where the strategy comes into play.
Switching gears slightly, and in the context of elite resource team, and the advisors and the CPAs that
Mhm.
are members of the organization. They have a model which is it's a collaborative model between typically an advisor and a CPA. They
Mhm.
create a proactive planning team, and
Yep.
then they have their virtual family office of different experts that they call in as appropriate. Where do you fit in that ecosystem?
We have two services ultimately. One is tax resolution, meaning helping someone with a tax problem, and the second is tax planning itself. Okay. Our unique take on planning is that we look through the window of resolution,
Hmm.
meaning every strategy we put in place is going to be based off of code, regulation, or case law. Number one. Number two, when I put a plan together, it too is customized and it's based off of strategy and goals. You have to know where you want to go before you decide to take a plane, train, or bus. A plane is going to get you there faster, but it's going to cost more money than a Greyhound bus. A Greyhound bus is still going to get you to the destination. It's going to cost a lot less money. It's going to take a lot longer, and you're going to have a stinky person beside you. That way, from a planning standpoint, if we know the goals, then
Yep.
we can figure out how to get there in the fastest way. Point A to B, the fastest way is a straight line. Sometimes we can't take a straight line. Sometimes we have to put things in place before we can even start a plan.
I've worked with over the years many advisors, oftentimes that do some form of advanced tax planning or talk about it. And of course, they collaborate with their CPAs and possibly a tax attorney and different people. My part of that process or my vantage point has typically been more on the marketing and lead generation side. And so, what I've found interesting is that we can create communications that really get people's interest. Imagine eliminate your capital gains tax, reduce your
Yep.
income tax by this much. And it seems from a marketing stance, it draws people in, obviously. But what I've also found is that those larger cases have tend not to close as consistently. And one of
Mhm.
the biggest reasons is, I think, fear. Right. If it sounds too good to be true, probably is. It's just, was this really legal, et cetera. And so you may have already answered it, but just from that perspective, when you're working with, say, a proactive team and maybe their client, what kind of reassurance or comfort do you provide so that they're more likely to want to execute on X, Y, and Z strategy, knowing that they're doing the right thing for themselves and they're also protected long term? Could you add anything to that?
Absolutely. I think that the client ultimately has the decision anyway. What my job is to do is to give them options. Okay. And then to advise based off of probability, right? So sometimes I say these are four things that we could put in place. The probability of us being able to do this within this certain period is X. I have a 95% possibility that we can get this done within 4 months type thing. And it's going to save you $25,000 at the end of the year.
Mm.
Or we can wait and do this one thing and it's going to save you the $25,000, but the timing we may
Mhm.
have to wait, right? We always look at number one, the investigation and the goals. Number two, the path itself and the implementation of that path is very important. I call it using the golden path. The first thing in the golden path is the investigation and the goal crystallization. The second item in the path is selecting the golden tools. Which strategy would help the best? And the third is embarking on that quest, right? How do we go and start that implementation? I think that our process, you have to have each one of those different items in the process in order for you to ultimately reach that end level. This is my one strategy that I like to use. I don't do that. I look at what the client is doing,
Mhm.
what their goal is, and then I customize based off of that.
Yeah.
And I say, okay, these are your six things you may want to do. If you don't do this is how much you're going to save. If you do all six, this is how much you're going to save.
Yep.
It really ultimately goes down to the client as to what they want to do. For example, I had one gentleman that loved real estate. So there was no way that I was going to get him to invest money into a retirement account because he cared more about putting money into real estate
Yep.
than he did putting money into retirement. So it's also knowing your client and knowing what would be better for them as well, or putting the things in front of them that they would like to see better. You know what I mean?
Yeah, definitely having a big enough toolbox so that you can choose the appropriate tools based on their goals and desires.
You said it so much better than I did, Paul.
Just a couple more questions while I have you.
Yeah, of course.
There's a lot of talk about AI, for example, artificial intelligence, and I know it's impacting what I do. Personally, I love it. I'm embracing it. Whether it's AI or other trends or changes in what you do, what do you see happening in the industry? Tell us a little bit more about just the industry, how it's changing, and how you keep up with it. What's top of mind for you?
Absolutely. When I got into this, the internet wasn't around and we had to do all of our research in books. And the problem with that is we have a lot of case law. Okay. Because we did not have a lot of the case law in front of us at all times, it gave us some disadvantages, right? Now, because we have more at our fingertips, the worry that we have is that information accurate? You can go to Uncle Chat GPT and say, tell me about X, and it'll tell you about X. The problem with asking it about tax court cases is it can give you a false positive, right? And so what that means is,
in my words, it's just going to make something up.
That's right. So it'll say, oh, Top Gun talked about this court case over here, or in the court case of movie there is out there. It just pulls a case and it just names a case. And if you don't do your due diligence, it could be a problem, right? I think AI is going to transform our industry. I think that the people using AI are going to just understand that it's just going to be the next step. And the people that choose not to use AI are going to get left.
I think is really true, which is AI is not going to replace us, at least not yet. But a person using AI is going to replace a person not using it.
That's exactly right. And that's the thought. Anything that you do, you have to make sure that you do your due diligence and it's the correct information going out. But it doesn't matter if it's a trend or a new way to look at a case or a new way to look at a law. It's very important that the strategies in a tax plan that are used are based off of code, regs, or case law. At the end of the day, if you can't, or if your CPA cannot ask questions about it and get a clear answer, then it's probably in your best interest to say next.
This has been fantastic. I appreciate your time. And just as we're closing up, two more questions for you. The first one, is there anything that I haven't asked you that you think is pertinent to this conversation?
Absolutely. From a planning standpoint, it's very hard to do a planning retroactively. What does that mean? That means that if you come to me in 24 and say, I sold a business, or I sold a house in 20, what do I do? The answer is you pay tax. That's the answer. Planning is proactive and it's for tomorrow. Planning is not for yesterday. Number one. Number two, planning typically has to be for business owners, and it's harder to do with a high W-2 earner unless that high W-2 wage earner is willing to invest. Let me tell you what that means. Oil and gas. You can invest money into oil and gas, and it can help you save on taxes. Another investment is solar. You can invest into solar and get a tax credit. Remember, a credit is a dollar for dollar reduction of tax. A deduction is a dollar for dollar reduction of income. And then the income is taxed at a rate. So credit is always better than a deduction. Okay. So business owners are the ones we can do more for from a tax planning standpoint, strictly because the income is not named. As a W-2 wage earner, the income is named, meaning you don't have a choice to manage that type of income. As a business owner, you can.
Do you have some strategies for W-2 earners, or is it just...
We do, but there again, there typically has to be an investment, right?
Okay.
So an investment in real estate, an investment into solar, an investment into oil and gas, commodities, those kind of things.
Yep.
Typically for a high W-2 wage earner, it has to be with an investment in order to reduce those taxes.
Okay. And final question. So for someone listening to this, whether they're part of ERT or not, but they're a financial advisor or a CPA, and they're interested in learning more about you or reaching out to you, what's the best place for them to learn more or to reach out?
Absolutely. I would encourage them to go to our website, which is www.golden.taxrelief.com.
I've enjoyed the conversation. I've found it interesting. You've made me laugh, which I always enjoy. It was great.
It's hard to make tax fun. And I come with a thought pattern of, hey, look, life doesn't have to be boring. let's take the lemons and not only make lemonade, but let's use the rind for something else too.
That's right.
At the end of the day, a situation is not going to determine who you are as a person. Okay. From a resolution standpoint, great people have terrible things that happen to them every single day.
Yeah.
From a tax planning standpoint, until you actually get yourself into a plan and plan for tomorrow, it'll never start. So today is when you should start, not yesterday, not tomorrow. Today is the day.
Just to add to that, so today's actually April 18th. We're 3 days past April 15th. So just out of curiosity, do people on April 18th typically, and whether we add this or not, I don't know, but in your experience, do you find that someone has just paid a lot in taxes and now they're like, this is terrible, I need to start planning? Or do you find it's more of, it's done, I can't do anything? What's your experience in terms of?
It's really according to how hard the wallet gets hit, brother.
Yeah, okay.
You have a couple ways to look at it. A lot of people, when they have to pay a lot of money at one time, they're like, what can I do to never have to do this again?
Exactly.
That is the best timing to meet with them because they're motivated. They feel pain right now and they're ready to never have this happen again. On the other hand, there's the other thought that at least I had enough money to pay them this
No,
year.
I don't like that whatsoever. I like the previous thought. I'm in pain. I need resolution. I need to reach out to Ben Golden.
That's exactly right. The beautiful thing is every time somebody pays quarterly taxes, every time somebody files that tax return, it's top of mind.
Yeah.
And business just gets in the way of everything else. These are things that a CPA should be proactive with their clients to say, listen, this is something that we need to start looking at, because if we don't, you can't buy a vehicle every single year. You should not go into debt in order to reduce your taxes. That's not really tax planning, in my opinion. But I think that now today is the perfect day. And so even though today is just after the 15th, if you never start, you'll never start saving.
Yeah.
You know what I mean?
I do. And just as a practical level, let's say someone's listening, they're like, they just got hit with a big tax bill. It's okay, I'm going to start planning. It could be today, but is there like a point in time that there's like almost a cutoff where it's too late? Or is it like between now and September? I don't know.
Think of it like this right here, Paul. We've already gone through 3.5 months of income for a business owner. That 3.5 months of income is gone. You can't do very much planning for that income because it's already made. When you get until August, September, October, now 8, 9, 10 months are gone. It becomes very difficult to do planning because you can only plan starting today to offset taxes moving forward. Typically, a plan is not retroactive. Now, there are certain things that you can do in October, November, December that are going to help mitigate some of those taxes from the prior months, but it's very difficult to do planning retroactively.
All right. You had to bang me over the head a couple times, but I think I got it. Today is the day, not tomorrow, not September, today.
That's exactly right.
Or at least whenever this podcast episode drops.
Exactly right.
Right.
Sylvester Stallone said in one of the Rockies, there is no tomorrow. Right? So
there you go.
It's today.
Again, thank you so much for your time. I appreciate it. And I look forward to meeting you in person in June, a couple months from now.
All the pleasure was mine. Thank you so very much.
Thank you.